let's talk about a different subject, more distressed stuff. We're going to talk about some miners, some distressed miners, as I like to say. BlockFi and Bitfarms are having some troubles. Bitfarms is a Canadian mining firm. It's a pretty good miner with about, I think, 6 exahash online, which put in perspective is like less than 1% of the Bitcoin mining network, but a pretty sizable chunk of the mining network if you think about like how many different participants are involved in mining. They took out loans from BlockFi last year, about $30 million, an 18% interest rate. And now that BlockFi is going through Chapter 11, they're thinking, maybe we don't need to pay that off. The collateral backing this loan's about $20 million at this point, is only $5 million. So Bitfarms is looking at this and thinking, maybe we just default on it because you guys are in Chapter 11 anyways, and the collateral behind this is basically worthless. The collateral for a lot of these loans for miners is actually the miners themselves, the ASICs, and ASICs basically trade with Bitcoin. So if Bitcoin went down 70%, an ASIC probably went down about 70% as well. So that's why you see the collateral value plummet so much. I think this gives you some insights into BlockFi. BlockFi was running a trading and lending desk for miners, or a mining finance desk, and they were using that to pump funds into other portions of for their retail clients, right? They take interest from miners and move it over to anyone who is putting Bitcoin onto their exchange and giving them that sweet, sweet yield. And if you look at this whole process and project with Bitfarms and BlockFi, you get an inner workings about how BlockFi was structuring their business and why it eventually failed. I'm going to throw it up to you, Adam.
Yeah, I'll just draw this back to kind of the bigger picture macro environment, if I can speak English today. I think, again, what we've seen over the course of the last couple of years is the latest iteration of a really substantial boom and bust cycle that isn't really about any particular industry, but really is more about the macroeconomic environment, right? The rules of the road, the world that we all kind of have to live in, build businesses in, find jobs in, lose jobs in, try to live as, normal adults who can be self-sufficient. And I think that, again, that's really what we're seeing here. We saw valuations and sort of the cost to do things, significantly elevate far beyond what was a real true value, because monetary policy, specifically the overproduction of money, and then too much spending of it by government entities, really kind of drove that and made it so that was the reality that we had to live with. And now we're watching as all of the sort of crutches and stops and all of the things that were propping up unsustainable growth have, over the course of the last year, been pulled out. And now we're seeing markets across really all risk categories continue to do this. So it's not surprising. But again, the thing to keep in mind is that this isn't a real environment. This is an environment that is being so ridiculously manipulated that it's kind of hard to even know what to do, because it's not based on reality. It's based on these rules and these decisions that can really change at any time, and that largely are not being made kind of to our benefit. So I'll leave it at that and toss it over to you, Zach.
Just continues a trend of the public markets being really unkind to all the mining firms that went public during the last stretch there, right? This is a publicly traded firm, I believe. They're warning of default, and I'm sure that their stock price has been hammered over these last months as Bitcoin has tanked precipitously. I think in retrospect, some of the decisions to go public from some of these companies as they sought capital in the public markets, I think some of those companies are probably regretful of that, but I don't know. I'm not an expert on that front, but it seems as though they've been significantly punished by being wedded to the price of coins, as that's being reflected in the price of their stock, and they are left teetering on the brink of default. So I think that to me is sort of the trend here that follows, is that a lot of these miners that went public really felt a lot of pain upon entering the public markets. I got to give this to Jen. Oh no, Will, you take it away. Closing thoughts on this one.
One quick quip I'll give to Jen. The good thing with mining companies right now is that it's so bad that they can kind of do whatever they want. Like, things are so bad that your stock can't really go down anymore, so they have time to restructure.